Good morning, everyone. This is Brad Matheny. Today's the 5th of December. This is a quick little update. You know, right before the election, I did a bunch of research. In fact, I can show it to you over here if you don't mind me having to look around here. No, 2024. It's going to be here, 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 and here. So I did a bunch of research prior to the election indicating using my uh, adaptive dynamic learning system, which is a predictive modeling system, that this is the chart here, that we had a bit of a dip, potential dip in the weeks after the election. Now, the longer we went further out into December, we end up resolving up here to the upside. This is the SPY chart. So understand that the way I look at the adaptive dynamic learning systems data is that when we get into a mode like this, we have this volatility down in this area resolving back up into this area. And we have this volatility up in this area eventually resolving into a fairly narrow channel right up into here. Right? So that looks pretty good. Obviously, now we're through November, through the election, and we're into early December, right over into this time frame here. We still have this volatility range setting up in early December. Actually, it goes all the way out to about here, the end of the year. So we have that, 603, 608 area on the upside with a potential move down to about 570, call it 575, 566 maybe to the downside. So we have that range on the SPY here. Let me make this full screen so you can see it, to really roll down into this lower channel, which is 575, call it 565 to 575. Now we get out of this and let's move to the next chart, which is XLB. XLB has the same rolling cycle, but if we move out to the December timeframe, we're looking at, the potential here of a $90 to $92 low, with the potential of resolving back up here to the 96, 98 area by end of January, February. So, we're looking at a pretty solid rotation. Now, we come over and take a look at XLB, we're already down into this $90 area. We've already kind of come down into this low area, but I still think we could see a deeper low. We come back over here to XLC, we had this deeper low, which I discounted because these white bars indicate that we only had one correlative price pattern. We didn't have multiple patterns, so one outlier pattern I don't really contend with too much. But we still have this move over here, potentially down in the 88 to 84 area for XLC. And XLC is at 100. Okay, so we could come down into this mode here and still see a fairly deep contraction down into this area, about a 9% maybe contraction on the downward side. Now, these are weekly charts, but I wanted to point out how we're getting some very interesting patterns, like here, XLE. XLE is potentially rolling down into 82, maybe down into the, let's call it 84 to 80 area. Okay, potentially. Not saying it's guaranteed, but here's XLE. And again, if we were to assume 84 to 80, that would be a move down into this area or this area, potentially on a breakdown. But now look at this from a weekly standpoint. This is a great example of what I wanted to share with you. We continue to have these excess phase peak pattern setups. I mean, it's really, beautiful how this sets up. So put this here, come to here. We rally up to a top, we pull back, we set up our flag. We don't get above the high. Let me draw a line so I can copy it. We don't get a close above that high until right there. So it is a wonderful example of an excess phase peak entering into an extended congestion period, really going all the way out over here and flagging. Finally getting up to this level, moving again into an excess phase peak and failing to get above the high level again, warning that we could have this rollover into a downward trend. And that's why I think this anomaly pattern could be very, very interesting and potentially very volatile if it happens. I projected that it would happen before the Thanksgiving or near Thanksgiving, simply because I thought, all right, well, moving into the election, we'll probably see a breakdown near Thanksgiving. But now it looks like with all of these sectors moving downward, really we're seeing utilities, energy bouncing a bit. Utilities have been fairly stable. You can see this to the upside. And utilities were supposed to go up. Now we're right at where we're supposed to go. So let's go through the list. So XLE was supposed to move down here to this $84 area. Instead, it rallied, it peaked, it rolled. Now it's rolling downward extensively. Let me spread these out so you can see it. So we could see this move down to 84, and that could be a big breakdown. XLU was supposed to move up to around the $80 area. It did. It rallied up higher and has moved back down into the 80, 90, basically $81 area. I still think we're going to try to find support down here around 79.80 for XLU. XLK is technology, was supposed to potentially move down into this 213, 212 area. Instead, after the election, we saw the big rally. We're still peaking up here. But if the anomaly hits and we see this move come downward, we could see the anomaly move take this down about 9.5%. Okay, it could be a very big correction in the market. XLB, which is the materials sector, was supposed to move down here to about 90.5, 90.8. We rolled after the election, came back up, and look, now we're getting that big breakdown, targeting that area that I suspect. And we're going to be looking for support down here about 90.4, 90.6, 90.7 on this sector. XLP, consumer staples, really had a nice peak. But again, look, guys, look, excess phase peak pattern, beautiful excess phase peak pattern setting up. We have this high, we have this low. If we get a breakdown here and we do get this move down to this area, we're going to be looking at a breakdown into potential consolidation, maybe even moving lower potentially. So we've got to be very aware of this anomaly phase potentially unwinding the Trump rally, the Trump post-Trump election rally. Some people call it a victory rally, whatever you want to call it. We could be looking at an unwinding phase, reverting back down into these lower channels like I predicted. XLY, again, it's supposed to be coming down to this 185, 188 area. XLY is consumer discretionary, really has skyrocketed. And if we were to get a breakdown now from these levels, I'll get rid of some of these lines, we would be looking at a 17, almost 18% downward correction. What would cause consumer discretionary to move downward? Obviously, some kind of panic, maybe in the financial markets or in the global markets. But again, we have this big rally. We've extended upward. We don't have any sign of a correction yet, but the anomaly event, if it plays out, would hypothetically put us into this area. So remember, if the anomaly event plays out, we would be looking at around that area as a low. XLI, the industrials, rolling downward. You can see we're getting these types of flagging formations, still moving higher. You can kind of see this type of flag coming right across here and right across here. So you can see we have an A, B, C, D, E up to the top, or we have a pullback A, B, C, D, E breakdown. What we would be looking for potentially is that flag, that flagging rotation moving. And again, we would be looking for potentially something to reach down in this area as a low, then basing and bottoming maybe around the end of the year and potentially rallying back up out. So, given that move, we're looking at from these current levels about maybe an 11% downside move if the anomaly event sets up. XLC communications has really been on a tear. We would be looking for a move down in this area again, ladies and gentlemen. So I'm going to try to highlight these for you and really take a look at this as far as a downturn. We could potentially be looking at about a 10.5% downward move. Let me see where we're at here, maybe a little higher if we get that rollover. Okay, and that's again, if we get the rollover. XLV was supposed to come down to, let's take a look at the data. Let's come back over here. XLV was supposed to come down to approximately 147, 148. Let's call it 145. So let's call it 147. Around 147. Where did it come down to? 142. Here's the 147 area. It broke below it. Now we're in the mode of rolling higher for XLV. Healthcare was actually one of the strongest sectors that I looked at, but besides the SPY and communications, which we just looked at here, communications was supposed to roll down a moderate percent and then roll higher. But again, we're looking at XLV. We've had the pullback. We've seen the move already trying to find support and rally back out. We're looking at an upward rally here. If we were to determine where we think it's going to go from where it's at now, about a 7.5, 8% rally. Okay. XLF was supposed to move down here to this lower level around 42, possibly around 44. We're still looking at, again, if this rollover plays out, about a 10.5 to maybe 16% downside move if the anomaly event plays out. And again, XLRE was supposed to roll. And again, look, guys, look, it's just, it screams at me. Peak, pullback, flagging. We have not come anywhere near the high. This is weekly. Remember, we are watching this low. And if we get the breakdown that I expect off of this excess phase peak pattern, we're going to be looking at a move coming down from here into this area, building consolidation, and then maybe breaking lower. So you have to be aware that, we have a pretty solid downward shift right now of maybe about 12% for XLRE. And that's, again, if the anomaly pattern plays out. And remember, the anomaly pattern can play out really into early January. So, we could play out really out into this timeline here. I wanted to draw a vertical line, but that'll work. So we have a number of weeks left. We have 1, 2, 3, 4, 5, 6, maybe weeks before the anomaly pattern should attempt to find a base or a bottom. So be aware. This is one of the reasons why in my videos I've been telling you to be very cautious through this rotation. We're getting very volatile price swings. And I believe if the anomaly event plays out, we could get a very sharp decline in these sectors. And again, it's all been detailed in my report. So you can find my report if you want to by checking my resources in TradingView. And there's links to other things in my profile. Just click on my profile and you can take a look at it. But anyway, we have a very real risk of a breakdown right now. I mean, I am looking at these and I'm seeing these excess phase peak patterns and this potential breakdown setting up right now. And it's really setting up a very strong potential breakdown move. I don't know how to say it any other way, but we're really, if you look at this and you look at this roll up, breakdown, flagging, failed to reach a new high, rolling down considerably this week, and potentially breaking out of the flag formation. If we get this continued breakdown mode, then I'm going to be looking at this lower channel as the last level of support before we're coming down to take out these lows, or at least touch these lows, which were predicted by the ADL predictive modeling system. Remember, these things are, so we have XLRE is right here. You can see the XLRE potentially down into 35. I don't think I marked it there. XLRE I marked at 38, 39. But again, we could see a very big breakdown in the market. I picked this area right here as a pretty common pullback area, but we could see an excessive breakdown. And I really think that, XLF and XLRE are what we need to watch. Basic materials, maybe. Industrials, maybe. But I think XLF, financials, and real estate are the key components to this breakdown move. You can also pay attention to my crash index. This is the crash index. I typically keep it up and running to see what's going on. You can see the symbol right over here on the right side. It's basically 4 symbols together divided by 4, and we are rolling. We are rolling downward right now, meaning that we're moving into a weakening trend, weakening broad market trend. If we were to get a breakdown down into maybe this area, I would consider that a full on, not necessarily crash, but a good 7 to 10% pullback. And I think that is likely at this point. I think we're just kind of waiting off to see what happens. And we kind of need to see what happens right over here with this gap. This gap is going to be fairly important. So pay attention. If we break down below this gap and really break down below this low right over here, which is our little bit of last defense level, then we could see a move very strongly to the downside, especially between now and like January 10th, because I promise you there's going to be very low liquidity between now and January 10th. You might think that liquidity is normal, but no, liquidity is weakening after the election. You can see this big volume here. Okay, you saw that we had a run up, we had an election bump, then we had most traders pulling out and moving into protection. In fact, I know for a fact that a lot of institutional people are pulling out, dealing with a tax loss because you don't know what's going to happen into the early portion of January, February of 2025. Okay, guys, that's really it for now. Just wanted to give you an update on this anomaly. I would also be watching for the QQQ to break down. Qs have been on fire after breaking out of this move. I mean, look at this daily. We're rallying up, we're peaking, we've gotten above this move, we're up into the resistance area automatically. You can see this is from my earlier plan your trade video. We have a resistance area roughly here and here. We're already above that resistance area. Remember, I talked about the SPY reaching roughly, roughly this 605, and then potentially coming up to this 60 or 612, 613 area. We've gotten up into the 608 area, just slightly above 608. And again, we don't have that excess phase peak. Was looking for it earlier before we broke above this level. We're now in a rally phase, but again, we could roll very easily into a pullback, flagging, and then potentially break down to this 582, possibly even lower down into this 570 area on a breakdown. So be aware that, like I said, I'm watching this entire market sector kind of weaken. And really what I'm looking for is come back over here. I'm trying to watch XLF and XLRE, as well as my crash index, because I think that everything is going to be predicated on a move with the crash index and the financial markets and real estate. So this is kind of a good early warning sign, and then watching the spider sectors for general weakness is in my opinion, very important. We're not seeing it yet, but boy, do we have some interesting setups setting up on some of these charts. I mean, really, look at, well, XLV is not necessarily XLF. Where was the, oh, it's daily. I'm going to go back to weekly, show you these setups. Okay. So there you go. Big solid roll. And here you have these pullbacks, flagging. Where's those flags? Here you go. XLP, consumer staples. I mean, it's a big, broad pullback setting up in an excess phase peak pattern. I really think it's important to understand that this move is potentially very likely. Okay. Same thing here with XLRE. This breakdown move is potentially very likely over the next 5-6 weeks. I think we could have a very big, low volatility kind of a flash crash move. So pay attention. It could shake the markets up quite a bit.